Imagine this. You wake up one morning to find that the stock market has crashed, your 401k is down by 40%, and the value of your home has fallen drastically. You're unsure about your job, and there's no telling how long this economic storm will last. What do? The truth is, financial crises are unpredictable, but one thing is certain, they will happen. It's not a matter of if, but when. The question is, are you prepared for the financial storms that will inevitably come your way? Why financial crises are inevitable. Good morning, afternoon, evening, everyone. I'm so glad you're here because today we're diving into one of the most important topics that every individual and business needs to understand: navigating financial crises. It doesn't matter how old you are, what stage you're at in your financial journey, or whether you're just starting to save for retirement. Financial crises affect everyone. Whether it's a global recession, a market crash, or even a personal financial setback like job loss or a health crisis, we've all been affected by some form of financial turbulence. So how do we ensure that when the next financial storm comes, we're ready to weather it? Before we jump into the specifics, I want to take a moment to say thank you for joining me today. If you find this information valuable, make sure to hit that subscribe button. When we hit 1,000 subscribers, I'll be sharing even more valuable tips and strategies to help you stay financially secure no matter what life throws. Subscribe. Understanding financial crises. To truly navigate a financial crisis, we need to start by understanding what we're up against. Financial crises can take many forms, from an economic recession, a stock market collapse, or a global pandemic. But regardless of the trigger, these events typically lead to widespread financial instability. Let's take a quick look at some historical examples. The 2008 financial crisis is one of the most well-known in recent history. It was triggered by the collapse of Lehman Brothers, which led to a ripple effect throughout the global economy. Housing prices plummeted, millions lost their homes, and the unemployment rate soared. In more recent times, the COVID-19 pandemic created a financial crisis for many people and businesses, even though it wasn't caused by economic mismanagement. Entire industries were shut down, small businesses were forced to close their doors, and millions were left without a stable income. A financial crisis can be triggered by many factors, but one thing remains constant: the economy takes a hit, and it takes time to recover. The emotional toll of financial crises. Now, let's talk about the emotional toll that financial crises take on individuals. Many people focus only on the practical and financial aspects of a crisis, but the emotional and psychological impacts are just as significant. During the 2008 recession, millions of people faced job losses, home foreclosures, and lost retirement savings. The stress and anxiety that accompanied these losses had a profound impact on people's mental health. People were fearful about the future, about whether they could ever rebuild, and many felt helpless. The key here is understanding that financial crises bring about a range of emotions, including fear, anxiety, and sometimes even shame. These feelings are completely normal, but it's important to address them head-on so they don't prevent you from making sound financial decisions. Preparation is key. Here's the most important thing you need to understand. Preparation is key. No matter how unlikely a crisis may seem at any given time, preparing for one will significantly increase your chances of not just surviving, but thriving. Build an emergency fund. The first step in preparing for a financial crisis is to have an emergency fund. Ideally, you should have at least 3 to 6 months' worth of living expenses saved in an accessible account. This will act as your financial cushion in case of job loss, medical emergencies, or other unforeseen circumstances. Diversify your investments. The next step is to diversify your investments. One of the most common mistakes people make is putting all their money into one asset class, like stocks or real estate. While it might seem like a safe bet when the market is doing well, it leaves you vulnerable when the economy takes a downturn. Diversification can protect you when markets fluctuate. You should have investments in a variety of assets, such as stocks, bonds, real estate, and precious metals. This way, if one market crashes, your other investments can help balance out the losses. Secure your income. In addition to having an emergency fund, it's important to secure your income. Many people make the mistake of becoming too reliant on one stream of income, whether that's their full-time job, a business, or an investment. Having multiple streams of income can cushion the impact if one income source dries up. This might mean having side jobs, investments that generate passive income, or even skills that you can monetize in a crisis. Debt management. One of the worst things you can have during a financial crisis is high-interest debt. Credit card debt, payday loans, and other types of expensive debt can eat away at your finances when you're already stressed. The goal should be to pay down high-interest debt as quickly as possible. If you're not sure where to start, try focusing on the smallest debts first, debt snowball method, or tackle the ones with the highest interest rates, debt avalanche method. Surviving a financial crisis. So, let's say that despite all your preparation, a crisis happens. It's time to act, and the key to surviving is staying calm and thinking strategically. Stay calm and assess the situation. When the market crashes or you face an unexpected financial setback, the first thing you need to do is stay calm. Panic will cloud your judgment and lead to poor decisions. Take a deep breath, assess the situation, and make sure your emotional state isn't driving your decisions. Cut back on unnecessary expenses. Now is the time to review your budget. What expenses can you cut back on? Do you really need that streaming service or those extra luxury purchases? Reducing unnecessary expenses will help you maintain your financial health. Consider your long-term financial strategy. While it may be tempting to sell your investments during a downturn, it's important to consider the long-term perspective. Historically, markets recover over time. So unless you need immediate access to the funds, consider holding on to your investments and allowing the market to recover. Always remember, selling in a panic is usually the worst decision you can make. Reevaluate your career and skills. If you lose your job or see a decline in your income, it's time to reevaluate your career. Can you pivot into a new industry? Are there additional skills you can learn to increase your job security? Upskilling during a financial crisis can make you more marketable and help you stay afloat until the economy recovers. Rebuilding and thriving after the crisis. Once the crisis has passed, it's time to rebuild, and perhaps most importantly, thrive. Take stock of your finances. After the crisis, take a step back and assess the damage. How much did you lose, and what can you do to recover? Take this as an opportunity to reset your financial goals and refocus on building wealth for the future. Invest for the long term. The aftermath of a financial crisis is often a great time to invest. Stocks might be undervalued, real estate prices may have dropped, and there may be opportunities to buy assets at a discount. The best time to invest is often when others are fearful. Be patient, strategic, and stick to your long-term goals. Build resilience. The most successful people aren't the ones who avoid crises. They are the ones who are able to bounce back from them. Financial resilience is built over time through consistent savings, smart investments, and maintaining a calm mindset during tough times. The road to financial success. In conclusion, financial crises are inevitable, but with the right preparation and mindset, you can not only survive them, but use them as stepping stones to long-term financial success. It's about building a solid foundation, staying calm during the storm, and having the discipline to recover and rebuild when the time comes. If you enjoyed today's video, don't forget to hit the subscribe button. Once we hit 1,000 subscribers, I'll be bringing you even more detailed strategies to help you thrive in any financial situation. Thank you so much for watching, and remember, your financial future is in your hands.